When a taxpayer owes a large sum of money to the IRS, there are options available. The IRS Offer and Compromise is a popular program that many have heard about that lets taxpayers settle tax debt for pennies on the dollar. Now, this is often touted as the Fresh Start program. Although the process has not been widely publicized, tax compromises have been provided for in the Internal Revenue Code as far back as 1906. Tens of thousands of Americans have settled back taxes for a fraction of the original amount owed using the Offer and Compromise. All Offer and Compromise cases are different and are affected by their unique circumstances. The settlements have been reached with millionaires and laborers. No particular economic group is exempt. If someone tells you that the Offer and Compromise is a new and limited time program, that is not true. The Offer and Compromise program has been around since the 1870s, shortly after the Civil War, and has been provided for in the Internal Revenue Code as far back as 1906. So the Offer program has been around a long time, since the 1870s, and is not going away anytime soon. It is an effective collection tool for the IRS, but it is advised that you do not delay to resolve your case as quickly as possible. It is a dynamic process that can dramatically change at times. Hi, I'm Gary, and welcome to TaxBulldog for the best thoughts and ideas for trimming your tax debt. These videos are to help you to help yourself to avoid costly professional fees. If your situation has a level of complexity, then you may want to consult a tax professional. See my video on selecting a tax professional to represent you at this link. Now, these videos will at least give you an introduction of what to expect and to know when someone is just misleading you. Now, before I start, I have to make a few disclosures that are important. For purposes of brevity, I will list these in the description below. Be sure to read them, as they do contain important information you will need to know. Now, in these videos, I will make references to links and resources on the web. Often I'll display them on the screen, and I'll put them in the description below. If the link is lengthy, I will just list it in the description below. So, to get down to this subject, in this video, I'm going to talk about the IRS Offer and Compromise process. Now, I would recommend that you obtain our book, /IRS Back Taxes, at this link. This will help you to follow along in this video series. Now, in this video series, I'm going to follow along with the chapters of our book, excepting the introduction and chapter 1. I reversed those two around. I am calling this video chapter 4 to keep in line with the book. Now, simply put, the IRS will likely settle your tax bill if you can prove a current settlement will net the IRS more money than an extended installment agreement or other means. They are motivated to do this. In 1993, the total of compromised tax debt was over $2 billion. But at the end of fiscal year 2014, the balance of reported unpaid federal taxes, the tax gap, was up to about $450 billion. Now, that's a big gap. In 2016, the IRS received 63,000 offers and accepted 27,000 of those. That's a rate of 43% accepted. While that doesn't seem very high, the qualifications of the submitted offers have to be taken into account. Many of those were self-prepared by taxpayers without the knowledge of how the system works. Knowing that, as we teach here, greatly improves your chance of success. Now, the tax gap is a huge amount, and the IRS would like to collect it. While unemployment was high recently due to the Great Recession that started in 2008, the IRS is accepting offers now from unemployed taxpayers. As of the date of this video, the economy is still anemic. If the economy improves significantly, the IRS may change whether or not they will accept offers from the unemployed. Previously, the IRS would put the case on hold during unemployment in an attempt to collect more money when the taxpayer found gainful employment again. The IRS is not just aggressive, they're pragmatic as well, which means they'll look at your case realistically. If you are able-bodied with a career in front of you that suggests to the IRS that you are worth more over time as a productive taxpayer than you would be if you were saddled with tax debt. But if you are older or sick, making a settlement earlier rather than later is better for the IRS. Ultimately, the IRS knows that its best interests are served by taxpayers who are productive, creditworthy, and will be compliant with future tax payments. Now, this doesn't mean a free ride. If the Offer and Compromise is to be considered as the means for relief, a bona fide tax debt must exist. Your problem must be one of such magnitude that it restricts your ability to live and work in reasonable comfort. You must be able to prove that your offer is reasonable in light of your present circumstances and that there is no anticipated windfall in the foreseeable future which would solve your problem. Typically, expecting to win any lotteries is whimsical. There are many examples of working men, women, and businesses owing tens of thousands of dollars in back taxes who have negotiated a settlement with the IRS. But the settlement amount is often more than what a taxpayer can pay unless the taxpayer liquidates everything they own. Now that's not usually practical. In these cases, the settlement from the IRS is too good to pass up, so taxpayers are motivated to borrow money from a relative or a friend to pay the settlement amount. Now, the IRS has settled with a variety of people, businesses, and estates. Some settlements are made with taxpayers whose health was suffering or with deceased taxpayers whose estates are subject to massive claims by the IRS. Other settlements are made with business owners for past employment taxes when it is clear that, while the business was able to pay current taxes, past tax obligations threaten the creditworthiness and competitiveness of the business. The IRS also has approved settlements when savvy investors make business investment offers contingent on a successful offer in compromise. In other cases, taxpayers who have been subject to bad professional advice or who have been burdened with unusually heavy tax obligations because of divorce judgments or other domestic crises are, in many instances, eligible to compromise tax debt under an offer in compromise. Now, the benefits of an accepted offer in compromise include the release of all federal tax liens and a chance for a fresh start. Do you qualify for an offer in compromise? Well, that depends. If you are already involved in a bankruptcy proceeding, you cannot apply for an offer in compromise. The bankruptcy precludes that. If you are not in bankruptcy, you must prove to the IRS that one of two conditions exist that would warrant serious consideration and acceptance of your offer. The first condition is called doubt as to collectability. In this case, you would have to show that the IRS is unlikely to ever collect the tax owed from your current assets and income and from predictable future income. The second condition refers to exceptional circumstances, also known as the effective tax administration offer. We often refer to this as the hardship offer. This says that you owe this amount and have sufficient assets to pay the full amount, but due to exceptional circumstances, requiring full payment would cause an economic hardship or would be unfair and inequitable. You can submit a written narrative explaining your circumstances. If you can prove that you would suffer from an inequitable, unfair, or economic hardship, then you would qualify to make an offer. Now, for more information about how the IRS manages this condition, go to this link. Currently, this has been written into the IRM at 5.8.11, or at the link I just mentioned. Note that as of March 2011, doubt as to liability as a condition for determining eligibility for the offer in compromise was removed from the list of conditions. Now, one tip to determine whether your offer and case have potential merit, use the IRS's Offer in Compromise pre-qualifier tool at this link. Now, streamlined offers in compromise ended as of May 13th of 2012, so I'll not cover this topic. So what are the odds of winning a settlement? Submitting an offer in compromise application does not ensure the IRS will accept your offer. It begins a process of evaluation and verification by the IRS, taking into consideration any special circumstances that might affect your ability to pay. Generally, the IRS will not accept an offer if you can pay your tax debt in full via an installment agreement or a lump sum. It's not a magical process, nor where you can say, hey, let's make a deal, as you may with unsecured creditors. Technically, the IRS is a secured creditor. Now, here's a little secret. Taxpayers who have no significant assets, marginal income, and apparently limited prospects for improving those things have the most negotiating power with the IRS. Basically, the bleaker your financial picture looks, the better the odds. Older taxpayers and those with health problems have better odds, and extreme personal and family hardships improve the odds. Now, advantages to the offer in compromise is that under the right circumstances, compromises with the IRS can be had for less than 1% of the total bill. I myself had direct experience preparing 2 settlements, whereas the offer amounts were only $20 each. This is an extreme example, as situations vary. In every case, this is based on the merits of the case. But in all accepted compromise cases in which an offer is paid in full, all federal tax liens are released. Normally, this means an immediate improvement in credit rating, although credit bureaus typically list release of lien information for credit files for 3 years. However, this period is less than the 10 years associated with bankruptcy judgments listed in credit files. Now, during the application period of an offer, the IRS usually suspends actions which would hurt the taxpayer's ability to honor the offer. This does not necessarily mean that all collection activity will stop, but it does mean that the IRS does not want to undermine any chances of expediting a legitimate offer. If, however, the IRS feels that the offer is frivolous and designed to delay collection action will not be suspended. Submission of an offer in compromise does not automatically stay collection of an account. If there is any indication that the filing of an offer in compromise was solely for the purpose of delaying collection of the liability, or that the delay would jeopardize the government's interests, immediate steps will be taken to collect the unpaid liability. The disadvantages to the offer in compromise: the offer in compromise process requires total disclosure of assets. It can be safely bet that the United States has the most sophisticated intelligence gathering network in the world, which would be used to gather and confirm financial information from you. If you have an installment agreement with the IRS will know everything anyway. But the issue of whether you want the government to have a detailed picture of your finances is a serious one. It can get worse. The Internal Revenue Manual states that if an offer is rejected, the information gathered during the offer process will be used to assist in further collection. This is usually not a problem as long as you are being proactive with the IRS. Now, interest continues to accrue during the offer and compromise application process. If your offer is successful, but you have to make payments over 2 years, the IRS can record a notice of federal tax lien that shows your debt. The lien stays in place until your debt is paid or until the statute of limitations for collections is over. In this case, the statute of limitations of 10 years is extended by the time it takes for the IRS to consider the offer. This gives the IRS additional time to collect for what they had foregone. Now, if the offer includes a collateral agreement and you have a sudden increase in income, you'll be paying a significant portion towards the offer. Now, during the offer process, all estimated taxes, payroll taxes, and tax filings must be kept current. Also, the offer in compromise represents an agreement between you and the IRS for a certain period up to 5 years. So if you default, the IRS can liquidate the agreement and reinstate the entire tax liability plus penalty and interest that may have accrued. A note, collateral agreements exist but are a rarity these days. We have not seen one since 1998. The bottom line, make sure you explore other options such as bankruptcy, and don't make an offer unless you meet the required criteria. You will need to be brutally honest with yourself and relate the true facts of your situation on the application so that your case meets the spirit and the intent of the offer and compromise process. We all are conditioned to make our income and asset graphs go up, but you don't want to do that while you are trying to negotiate a tax settlement. So it's time to put yourself on hold financially and focus on reducing your obligations. At the same time, you don't want to artificially reduce income or forego opportunities that may outweigh the tax consequences. And don't go under the table or underground, because there are IRS investigative techniques that will expose your action. Being honest will result in a better outcome. So in summary, the offer in compromise is an effective collection tool for the IRS to resolve cases and a great benefit to the taxpayer. Taxpayers must make full disclosure of their financial lives, but those who have little have the greatest chance of success. Taxpayers who have no significant assets, marginal income, and apparently limited prospects for improving those things have the most negotiating power with the IRS. Now, each case is reviewed on the merits of the case. No two are exactly alike. Some who seem similar can have vastly different outcomes. Now, the settlement gives the taxpayer a new life and a fresh start. Now, there are some covenants of the settlement agreement, such as being compliant for at least 5 years thereafter. Now, here's some resources, and I'll put these in the description below. TaxBulldog.com. This is my website with many articles, documents, forms, and other information in regards to dealing with tax collection and audit issues. I try to demystify things. /IRS Back Taxes book. This is a book that I wrote with my co-author, and it's available online at this link. Having this book will help you follow along in this video series. For updates on this book, see this link. The TaxBulldog here on YouTube for helpful tax videos. And I'll put the link in the description below. The IRS on YouTube. This is a treasure trove of helpful videos for taxpayers. This is very good information, but do be aware that these are brief and they do not give you all the insights and nuances on the topics. In the description below, I will list relative references to Federal Internal Revenue Code, U.S. Treasury regulations, Internal Revenue Manual, and policies and procedures that may apply. These are not all inclusive, as there may be circumstances where other laws, regulations, policies and procedures, and court decisions may apply. So in closing, thank you for watching this video. If you liked it and you got some useful information and ideas from it, please give me a like and share it with your family, friends, and colleagues. This is all I do and I do it well. Please subscribe to see my future videos as I produce them. And be sure to hit that bell icon so you won't miss out on any new information. Please leave your comments below. I can answer general questions here, but for specifics, please contact me at taxbulldog.com. Thank you.